This is shaping up to be one of the most important, most critical weeks for the markets all year long. It's the second week of September. 2020 has already been tremendous. Here we go. We're going to do a special update today because I think that the market conditions warrant it. We're going to take a look here at the S&P 500. We're going to follow that up, taking a look at the Nasdaq and all these critical levels. We'll check in on the Dow as this week gets started. It continues to be a dollar story. We're going to track what's going on with the DXY. We're going to take a quick look here at gold and silver, and then also at Bitcoin. We're going to check it all right now. If you're new here, welcome. And if you're not, welcome back. This is an important week ahead for multiple reasons. We're going to start off with number one reason is that we are at some pretty critical areas over here. You can see where I'm marking up this trend line over here. Why we've remained above that. We've been riding this bull market. You could see right now that's being challenged. We could see a possible breakdown here. We could see a possible breakdown if we lose 3,300. If we break this trend line over here, let me go ahead and clean that up. Let me zoom out. You could actually see Friday's low over here. That is coming in right on this trend line over here, coming in also at the low of Friday, 3,300. A break there could see some selling, some rapid selling. We could actually fall off a couple hundred points. We could come down into 31.23 support pretty quickly. Now, I don't want anyone chasing the breakdown. If we do break down here, watch price overnight here. Watch price Monday morning into New York. If we lose this trend line over here and we break down, I do think that we could accelerate pretty quickly. I think everyone should really play this very smart. And the reason I say that is because we also do have on Wednesday the FOMC meeting. We have the press conference. This is going to be enormous for the markets. The markets is going to react one way or another, and it could be big. The market might, after Wednesday meeting, actually push the Fed's hand, looking to push that Fed, looking for that stimulus. The market is known to do that. If we break over here and start breaking down, we're then going to look for a possible way to position in onto the short side. Don't be too aggressive in getting short before there's a clear signal. You could see what happened back here back in May when we broke down, right? And then we had no follow through. We came back above that trend line pretty quickly and then confirmed it back into support and then really went off to the races. What was really worrying to me, by the way, is this headline from Barron's magazine, and it said that the tech bubble is not ready to pop. That's quite alarming for me. Barron's is known to call tops and bottoms. Nevertheless, we're going to follow what's happening on the chart over here. Now, also, we did hold the 33.39 support on Friday. You could see this long wick over here. We bounced back above it, held double touches on this trend line over here. You could see how relevant it is. You could see those two touches last week. Watch, the more touches we get to it, the more of a chance of it breaking. Let's see if the markets are able. What we're looking for is the markets to hold here, to make a higher high and rally off of here. This gives a nice buy entry over here. Now, it's a very critical week. We're at some critical levels here. Markets could actually show their hand this week, break down. It could happen before the Fed. That's why I'm doing this special video this weekend, to give everyone clarity going into the Monday session. It's a very important session over here. Watch out. Take a look at the Nasdaq also. The Nasdaq was able to go ahead 2 touches over here. I like the fact that it took out the low here last week by just a couple of points and then rallied up. You could see that we did also close back above the 11,085 support over here. We bounced again off of this trend line. I'm going to make this a little bit brighter for you. This is the trend line we need to focus in on this week. Let me make that really bright. You could see this is also the prime trend line over here. This is where bounce off of here, you're looking to go long. However, we've had 2 touches. If we break this horizontal support over here at 10,913, and also coming in at the exact same level is this trend line, rising trend line support over here. If we break below there, we could see a sharp sell-off in the Nasdaq. We could be targeting initially somewhere around 10,300, maybe even the whole number 10,000. That could come quickly. We'll be looking at it Monday morning. If we break down, we'll look how we can position ourselves into it, because that will open up the downside for us. However, what we're looking for is this support to hold going into Monday overnight over here. Let's see what happens. Just keep focused. This is when you really need to be on top of your game. It's important you know the levels ahead of time. It's important that you wait for confirmation before taking any trades over here. Let me peek at the Dow over here. I want to just fall back over here. Dow's important level is a little different. The Dow's important level is over here at 2796. 27,096. This support over here is pretty important over here. You could see the Dow actually put in a higher low over there, a higher swing low, which is obviously a good sign over here. The S&P did that as well. You could see over there the higher low. The Nasdaq did not. The Nasdaq actually took out some stops over there. Also bullish. This could go either way. You need to be really alert. I am not able to predict the future. I have no idea which way we're going to go here. I'm ready at these levels of resumption off to be a buyer. This is the risk to reward is nicely in my favor now. At the same time, if we break down below these critical levels, I understand it could really open up the downside. Trading is not so much about predicting the future as it is managing your risk. Understand that the DXY is also, you could see it just consolidating still above the channel over here that we've broke out to the upside. Not only broke out to the upside, but have since confirmed that and are resuming off. However, and most importantly, we have a series of lower highs and higher lows. We're consolidating. The Fed is meeting. It's rare that you get a breakout ahead of a Fed meeting. It's rare. By Tuesday, London close, the markets are probably going to settle in and be waiting and watching for the Fed. We could see a lot of volatility between Monday and through Tuesday morning, though. All right. This is when you really need to be on your game. It's really important to watch the levels. Could we get a breakout here of the dollar, starting a counter trend move over here? Absolutely. Absolutely. What the levels to watch over here, we are resuming out of that right now. Okay, but not with any type of authority. We're going to look at the euro US dollar in a second as well. And you could see that also is in a very critical area. Across the board, we're at very critical levels. Now, waiting for the break and then looking and then waiting for that first pullback and then resumption out is going to give you the safest trade out of this. Right now, anyone taking positions without any type of confirmation is really just gambling. That could work out where you get lucky, but more often than not, you don't get lucky, right? It's much better trading from a position of power rather than holding on to something you don't want to be involved in. If we break out here, taking out last week's highs over here, the level is 93.64. I think at that point, it's a pretty clear resumption out, even though it's ahead of the Fed. The market could be actually pushing and working the Fed over here. Watch out. That's all I could say is just be on high alert over here. Let's take a look also here at the euro US dollar, and you could see over here as we're leaning into this area of trend line, this trend line support over here. We've been holding it since the middle of May, right? You could see over this area back into June, back into July, where we really touched it a few times and held it. We're back here right now again. We're trading just above it. If we lose this line over here, it really comes down to the $1.1769, 1.769, this support area over here. If we lose that, then we're seeing a big move on the dollar, right? The big test is going to come in on this blue line over here. That's the 12-year trend line going back all the way to 2008. If we lose that line, then we're going to see this probably will not occur before Wednesday's FOMC meeting. Watch that if we lose this blue line over here, this is coming in right now. This is coming in right now at 1.16726, okay? Right around that area, 1.16726. If we lose that trend line, then that's when we're going to see a big counter trend move on the dollar, coming back down all the way towards this support over here. That's coming in substantially lower, 400 pips lower at 1.269. Watch the dollar this week. Let's take a look. Watch the dollar. That blue line over here, watch what happens on the FOMC, whether 94 holds or not. Because if it doesn't, right? We could be seeing that big counter move on the dollar. Everyone be sharp this week. Let's check out what's going on with gold. You could see that gold is actually putting in this. Look at that. I still see that consolidation. I still see this looks like actually not so much a descending triangle, which I could go like that. You could see that descending triangle, right? What I see more is also just this consolidation, and it's a triangle. You could see over here off that low to that high, right? And then over here, this area over here, that's what we're dealing with. That is coming after that big up move, right? More importantly, if you focus in on what's going on right now, you could see that we have put in these lower highs, right? And still continue to put in higher lows, right? We are consolidating. Now, I lean towards this breaking out to the upside. If we lose 1900, that's at that point, everyone should get neutral. Everyone swing trading should get neutral and wait for a more substantial drawdown over here. First test in 1865, probably blow past that. It's at 1794. 1800 is a level you're looking to lean into if price holds and resumes off. Or if we lose that level, 1743 looks like the next level to lean into. Now, that's my downside. That's what I'm always watching my back, so to speak. But I'm watching here for this to hold and break out to the upside. That will be uber bullish for gold and silver. I have a feeling though. Well, let me get into that in a second. First, right now, let's look at silver. You could see the same thing. It's pretty clear the pattern that's developing on silver. It's the same exact pattern on gold. It's very clear. We see that triangle consolidation come after that last leg up. It's very bullish. Watch 26. Watch $26 on silver. Break down below it. Watch out. That's when we're going to see a substantial pullback that could be to 24.50. Let's see what type of pullback that is over there from where price is currently trading. That would be another 7.5% pullback. That would be pretty decent. I'd be looking to lean in over there. If we lose that level, if we lose 24.50, at that point, we're looking down at 23. Let me throw in a support because that could come into play this week. The markets are going to be lit this week. All right, I want everyone on top of their game. Let's look over here at what's going on with Bitcoin. Bitcoin, you could see yesterday on Saturday was actually bid. All of crypto was bid. Ethereum was really nicely bid, off 7.5% today. But you could see that Bitcoin got held up into that resistance, almost exact touch into the 1050.72 resistance right over here. Never broke out of the blue box, and we are in this blue box. Right? You're all familiar now with what's going on here in that blue box. However, the only bullish indication I have over here is that you could see that we have pulled back into that area of a local support, a resumption out of over here, and another touch at 1572. That would look very, very good over there. Now, I think it's time. We need to be really ready over here. I'm watching and I'm waiting if we break down what happens over here. And I'm looking for that. Is it possible we lose this area of double confluence over here? This trend line, if I back out, let me break out over here. You could see this is the all-time high connected to the June 2019 high. And then over again, we touched that in May right after the halving. And then that was the signal, the technical break that started the bull market. Very bullish coming back and testing that now when we resume out. Now, we could break down out of that blue box into this area over here. I have it between 9100 and 9200. Is it possible we lose that, right? Is it possible we lose that? And how much lower could we go if we do? It's something that you need to be thinking about just in case we see some type of solid sell-off in the equity markets that they're at this critical juncture, which is completely in play this week. Especially after the FOMC. Let's see how the market reacts. Let's see if the market gets what it wants. If the market doesn't get the type of response it wants from Powell, the market's going to push the Fed's hands because the market knows that the Fed is going to come in. The stimulus did not pass through, right? It's not coming from the government. Does it come from an executive order and the Treasury? Perhaps. Obviously, the incumbent is going to do whatever they can to get reelected. Now, at the same time, the Fed can't lose control of the markets over here. This is game time. This is in a really important time over here. Is it possible we break 9,100, right? 9,000. There's decent support over there. It's very good looking support. Call it 9,100. What happens if we break below there? Let's look over there. Let's see what we're looking at. I see some decent support again at 8,300, right? What's below 8,300? This is super strong over here in this area, 6,800. Do I think we're going down to 6,800? I do not. Tomorrow during the live stream, I'm going to ahead of time get set up and show you why I don't believe that's going to happen. I do not believe that's happening. Again, I think that this is not a liquidity crisis that we're facing right now, right? A sell-off in the stock markets right now would be much different than what we saw back in March. Is it possible that a sell-off in the equity markets would lead to a cascading effect that would then put pressure? Yeah, we're not there though. We're not there yet right now. I think that this is a fantastic time to be looking to lean in, to buy. I think that if we close the CME gap, which is still on the table, it's still a possibility, of course, because we have not broken out of this blue box over here. Just like last week, I was leaning in to continue dollar cost averaging. I will if we close the CME gap and into this area over here at 9,200. All opportunities there on the long term. Let's see what happens over here. Ethereum is actually in a precarious place over here. We had a nice bounce over Ethereum, breaking back above the $360 level, which started the bull market. You could see over here the market. Where did we come into? Look, I'm just trying to follow where the market is making that near-term resistance as we peaked out over here at $390 yesterday and have since sold off very, very hard. But you could see that we're into this critical $360 area. The markets, the follow what happens in the crypto markets today, this Sunday, before the equity markets open. They could be an indication of which way the equity markets take themselves. We are at a very, very, very critical place here today in the markets. Now, this is why I wanted to send this update over here. And I'm looking at the markets myself, right? And I see what a situation we're in. I also don't see any type of clarity. Someone mentioned last week, Jordan, because how often since we've been live streaming, publishing daily videos, have you ever heard me say that I don't see clarity, right? Pay attention. That's important over there. A lot of people are always looking for clarity. A lot of people always be looking to be in the market. It's not how you play this game. It's not how you play this. This game takes patience. You have to wait and you have to attack when the time's right. Right now over here, the most promising thing that I'm watching over here, if the equity markets are able to hold this area over here after this big test last week, resume off there, that's a great place to enter. Be aware. It's not only the S&P, the Nasdaq also, right, has touched this area over here. This is the place to lean into. Could we lose it? Absolutely. Absolutely. That's the whole purpose of this update. I want everyone to just be on red alert here, on hyper alert, okay? Now, if we break down over here, do not take the first break. Never take the first break. But Jordan, you said that the selling could come swiftly. Yes. Nevertheless, the market is not going to go straight down. We wait for the retest, and then we look for this support over here, this area, to hold as resistance. Could it be that we, for example, on the Nasdaq, that we blow through over here? The next support is at 10,754. Yes, but then we're going to come up, and then if we retest this and then resume down, that's our place to attack. All right. So just a little bit of patience, just trying to bring a little bit of clarity, because right now, everyone really needs to bring their A game because nothing's clear. We're at critical levels. We do have the FOMC on Wednesday. That's a huge deal. However, expect lots of volatility throughout the London Asian session, London session, into New York on Monday, and then again overnight. It's not going to quiet down until the close on Tuesday. All right, then we'll start looking at what's going on with the FOMC. I'll see you all in the morning. Have a wonderful day, everyone.